What's going on, guys? Welcome back to the podcast. Thank you very much for joining me. I am Jeff. We're going to be talking about some stocks, some news, everything you need to know that's happening this week in the world of finance, economics, maybe a little bit of politics. We'll throw it in there if we have to. I don't really want to, but you guys might need to know it. So I'll throw in what we need to do and just exactly what we're looking at this week. It has been just crazy with the amount of earnings, the amount of action, the amount of Fed talk and should we raise, should we hold, should we cut, just what's going on, and delayed information from everything going on in the government or not going on in the government, however you want to look at it. Man, it's just been crazy, hectic. Earnings coming from left, right, center, and it is just all over the place. So thank you very much for stopping by. We are going to try to cover it all so you know just what is going on. We're going to be looking at Caterpillar. We're going to be looking at UPS, NVIDIA, Eli Lilly, Meta, probably some Amazon. We're going to be looking here, there, and everywhere when it comes to these stocks to try to see just what we want to do and how we're going to make money in this market. So thank you guys very much for stopping by, and let's roll right into it here. We've got NVIDIA. They are trying to take the cake this week for making the most amount of deals, and it has been a lot to follow. We're going to roll right into this thing. They are at the DC GTC Technology Conference, right? So we are looking at just what is going on. Jensen Huang, not to be outdone by OpenAI. He's not going to be taking that backseat. And I was talking last week how AMD is really gunning for him, and that's probably the better investment. And I would say that NVIDIA, I think I said I'd buy if it broke out a little bit, got over 193, and then I think it took all of like 12 hours to do that. So now NVIDIA sitting at 202.49, about 15.5% of upside according to the analyst. That's all well and good. But we're looking at what deals have they made, what are they getting done, how are they going forward. So NVIDIA partnering with the Department of Energy to build 7 new supercomputers using 10,000 Blackwell GPUs. Pretty big numbers, right? So we're looking at them making more government deals. We're looking at NVIDIA partnering with Uber to build a fleet of self-driving cars, about 100,000 autonomous vehicles, mass production starting in 27. We're looking at NVIDIA partnering with Stellantis, a parent company of Chrysler, Jeep, Dodge, Ram, and Foxconn to explore a robotaxi joint venture. Also, car collaborations with Lucid and Mercedes to equip vehicles capable of level 4 self-driving. We've got major deals with the U.S. government, auto industry, and then we're moving on to the next big thing that they are working on, right? We're looking at them also working with Nokia to help develop next generation 6G cellular technology. And it feels like we just got 5G. And I think before that, no one really knew what all these different Gs were, right? We're looking at, 4G was like the greatest thing. No one really knew we were on 3G. And then 5G came out, and streaming got better, it got faster. There's a lot of different things that happened there. And now we're already on to 6G. And NVIDIA is going to be at the forefront of that also. So a lot of different things happening there. A lot of different things that we are definitely keeping track of. But wait, there's more, right? There's always one more with NVIDIA. So we're looking at Eli Lilly, right? We've been talking about Eli Lilly, the fact that I thought they got too cheap. That I'll get into that in a minute. NVIDIA and Eli Lilly are going to be building an AI supercomputer running more than 1,000 Blackwell Ultra GPUs, right? Going to reduce drug discovery times and enable breakthrough in genomics, personalized medicine, molecular design at industry scale. Basically, they're trying to make better drugs, find them quicker, find better ways to have less side effects, more individualized medicine. Hey, maybe this doesn't work for your genetic makeup. This doesn't work for your genomic sequence or whatever it is. I'm not a chemist. I'm not a biologist. I don't know. They're doing it. They're making AI and medicine work together. So hopefully this works. Hopefully we have less side effects. We have less problems down the road from taking a medication. Maybe we find out that Tylenol shouldn't be taken during pregnancy sooner, right? I don't know what they're doing, but they're going to be developing a lot of things to use AI to solve medicine problems, around the world. So ultimately, I think that's a good thing, right? So we're also saying, yes, it is a lot of deals for NVIDIA. That was all in a week, essentially. I mean, some of these might have been ongoing. The Eli Lilly AI supercomputer might have been ongoing, but I think the other ones were just announced. So I said with Eli Lilly, what happened with them, right? Let's take a quick look. I'm going to go ahead and pull up Eli Lilly and see just exactly what happened with them this week, right? So Eli Lilly reported earnings. They had some great numbers. They also were able to guide higher, which, as we know, is massive, right? So this thing was down at 625 like 3 months ago. And I said, this is something that I want to buy. I don't think it's sitting down here long. I'm taking, some action. I'm buying some shares. When orforglipron came out, the tablet, not injectable weight loss GLP-1, and the numbers weren't great, right? It said you were going to lose about 10 or 11, 12% versus 15, 16, 17% on the injectable. So it was not the result that they were looking for. But a lot of people overreacted to the fact that orforglipron was not going to directly compete with the numbers or the weight loss percentage that the injectable was. So it went down, right? I didn't think it was going to stay down for long, right? So my thought here was buy it while it's down. And then we've got, the earnings come out here, right? Their Q3 financial results beat estimates. Sales from its diabetes and obesity drugs coming in well ahead of projections. Mounjaro and Zepbound generated the bulk of Q3 revenue with $6.52 billion and $3.59 billion, respectively, exceeding both Bank of America and Street estimates, according to the note, right? They also were able to guide higher on earnings, right? So we also saw a lot of raises. Bank of America raised up to 950 from 900. And a lot of that was on the fact that orforglipron was pushed through. We are getting this to market sooner than later, and they actually think more people are going to take it because they don't like taking, having injections or having needles, and this just seems easier. So I'll take 12% of weight loss and not have to have needles, right? That's a lot of what's going on here. It's easier to take. And they think that it's going to do better for them and be another opportunity or another option for people to take rather than the injectable. So, hopefully this is a good thing for them. Hopefully this starts, really, driving all the numbers that they can get in the total addressable market or the TAM as to who is interested in this drug and what do they have holding them back from taking it, right? And a lot of people just don't like needles. I wouldn't want to inject myself with needles every, week or whatever it has to be for Zepbound or Mounjaro, right? So there's other options now, and that's going to ultimately help them. We're sitting at 862, and like I just said, Bank of America says, hey, this can go to 950. They got some other raises as well. There's only about 6% of upside, but I remind you, some of these 700 price targets were probably set when this thing was at like 650, and they haven't been updated yet. So you got to take that into account that some of these numbers are probably old. So if I'm looking at new price targets, which it is what it is. They're analysts. They get them wrong too. We see it all the time. They change it when, the earnings looks bad and then they drop it and they don't have the foresight to see that it's a one-time tax charge or whatever. So yes, we got buy ratings on page 1, right? All above where Bank of America said. At 950, we're looking at 976, 1069, 985, 1038. If you're listening on Spotify and not watching the video, you can't see this. I'll try to run through them for you. Yeah, Bank of America 950, BMO at 930, TD Cowen at 960, Bernstein at 1100, and Leerink Partners is the only hold on page 1 or page 2 at 715, right? So they think this thing's going to go down. I don't necessarily agree with them, and the 9 other analysts I just mentioned also don't agree with them. So, they might be right, they might be wrong, but I'm thinking this thing goes higher. Eli Lilly thinks that the company is going to be doing better as well. So yes, does the company doing better mean the stock's going to go up the same? No, it doesn't. You can definitely have a company doing way better and the stock does poorly for whatever reason, or vice versa. The company could be doing poor, and for some reason, it's just the Wall Street flavor of the week, and it just keeps going, right? There's a lot of unknowns. But for me, I think that this stock is fairly valued. I'm not necessarily looking to buy here, but I do believe in this stock long term. I think the time to buy was under 700. That was when you wanted to load the boat. You want to add a share or two. I'm not going to fault you. Long term, I think that's a good way to go. But I think to load the boat, back the truck up, load it up was under 700 for sure. That's where I'm at. So yeah, that's what I got there. We've got UPS. This is the next tab that I had pulled up. UPS has been rough, guys, and I've been trying to build this position kind of like Eli Lilly, but it has been taking a lot longer for this thing to turn around. That Eli Lilly thing was orforglipron, numbers weren't great, we're gonna dump it, right? Essentially, and that was an overreaction. UPS has had more problems. They've had, definitely problems with going away from Amazon, not really shipping as much through them. We've had a lot of the talk with $170,000 per driver. That's the cost to them between, medical and their salary or whatever else. The whole compensation package is looking like 170,000. Everyone would go out and be a UPS driver like the next day. So we've had a lot of problems with the union. We've had a lot of problems with how much shipping they're doing. Amazon, how are they going to replace that business? Well, they finally had a decent quarter, right? We finally had them better than expected, handily beating estimates on top and bottom. Company in midst of a turnaround, right? We've seen that. And like I said, it's a longer play here than what Eli Lilly was, right? That's how it's playing out. And the dividend has been pretty solid. The last quarter, they said it's solid. They're not touching it, and it stayed okay, right? The stock stayed okay. The business is trying to turn around. Well, now the business started showing signs of life, right? So we saw this thing move up like 10% on Tuesday, I want to say. UPS beats consensus targets. Company reported adjusted EPS of $1.74 on a $21.4 billion in revenue. Consensus was $1.30 and $21.4 billion. EPS really shined there, right? We've got like a 44-cent beat, pretty sound on that percentage beat there, right? So full scale turnaround after years of stagnant sales and growth and plummeting EPS. Part of its efforts to stem losses and cut costs. The company says it's laid off 48,000 employees this year so far, the most significant strategic shift in our company's history. Changes we are implementing are designed to deliver long-term value for all stakeholders. So this one's tough, man. I've been in this one for a while. I think I'm still down on it. I've been buying. I've been trying to up this dividend income when it comes to this one. And I think we were at like 7% of dividend yield. And I was really trying to also cash in on that and get in before this thing really had this rally. So we are sitting at 96.42. We are looking at an average price target of 102.70. So nothing crazy there. I'm sure some of these low price targets are from before this earnings. These buy ratings are all, triple digits from 107 up to 120. Two price targets at 120. I'll take that. I've been in this one for quite some time. I've been waiting for this turnaround. And now that it's finally here, it feels like I can finally breathe a little bit more, right? We've got a 6.9% dividend yield. That means when we're buying it like 10% lower, it's probably in the mid sevens. So I'm okay with this. It's definitely painful looking at it being last November at 138, and now we're struggling to get back up to 100 when the rest of the market has been soaring. But sometimes that's the way it goes. So we've got a lot of different things there. We've got Amazon. Actually, you know what? I'm going to roll right into. We're going to be sharing this one. A lot of different problems when it came to Meta this earnings season, right? We've got a big sell-off. Let's actually, I'm going to pop back forth real quick. We're going to take a look at what Meta was doing on share price when it comes to this 5-day chart. I'm going to share this one for you guys. We were sitting up here around 750, right? We dropped all the way down to about 651 after hours on Friday. So this thing has gotten a major haircut. And the question is why? Well, they had a huge miss when it comes to their EPS numbers. So EPS, earnings per share, was a huge miss for them. Diluted EPS would have increased by $6.20 to $6.25 compared to the reported diluted EPS of $1.05. Big miss. $1.05 versus $7.25. That is massive, right? The other one I just said on Eli Lilly was off by like it beat, or no, was it UPS? Beat by like 44 cents and it went up 10%. Well, Meta went the other way. It went the other way and it was down by like 10%. So why? They had a non-cash income tax charge of $15.93 billion. but the key word is one time. And then second would be non-cash, right? So one time due to the One Big Beautiful Bill Act. And this is also going to expect a significant reduction in our U.S. federal cash tax payments for the remainder of 25 and future years. However, they had to pay more this quarter. So led to the recognition of a valuation allowance against our U.S. federal deferred tax assets. So they got hit with those things that are deferred. They had to pay them. So while it looks completely awful, 105 to 725 on EPS, brutal, right? That's brutal. It's bad, but I don't think it has staying power. That is what I want to say. That's why I bought an option on this thing. It's one of the sole options that I've actually bought that's not a covered call. I don't know how it's going to go, but we took a stab at it, right? So that's what we're looking at. I believe in this company long term. The big beautiful bill and the fact that it's going to lower their tax payments going forward, I think is massive. But the other reason it also sold off was the amount of capital expenditure that they are looking to spend on building AI going forward. It is absolutely a big number that they are looking to spend, right? Where the capital expenditure, including principal payments on finance leases, were 19.37 billion, and that is actually going to go up. We've got some good news though, right? We got 3.5 billion average users for September, an increase of 8% year over year. Somehow they keep finding more people to join WhatsApp, Instagram, Facebook, right? They keep finding more people. That's like half the world at this point that is on one of these platforms. Ad impressions increased 14%. Average price per ad, 10% year over year. That's pretty massive, right? 10% on the cost of ads. Well, hey, people want to be there because there's 3.5 billion users, right? And you can pick where you want them to be, how much do you want them to spend. You can pick, the age of them, what they're into, different interests, because people put it all out there. Hey, I'm following this. Now I can advertise to those people, whether they're in my zip code, around the world, or whatever, right? So the ad spend is massive, but the reach is the best. So people are going to do it. Similar to YouTube, between Facebook or Meta and YouTube, or Google, that is so much ad spend. Most of the market goes to these two to advertise, right? There's obviously other ways to advertise, but so many are on there because of how many people and the interaction and clicks that they get from these ad programs, right? So total cost, actually, let's go back to revenue. Revenue, 51.24 billion, increase of 26%. That's fantastic, right? If you told me that I've got, 40 some billion dollars and we're going to take it to $51 billion. That sounds fantastic, right? That is great revenue growth. 26%, we'll take it. If your small business is doing $1 million and now next year it's doing 1.25, yeah, that's pretty awesome. So total cost is a big concern, right? We're at 30.71 billion on cost, increase of 32%. So you will notice that the increase on cost is more than the actual revenue increase, 32% versus 26%. That is a little bit of a concern, but a lot of this is in general and administrative. So we do have costs there, but the actual capital expenditures are going up as well. So we need to make sure that we're spending in the right areas on AI in order for, that big spend on CapEx to actually hit this revenue, right? Is it going to make us money or is it just costing us money? And that is the big question mark at this point. Is the money that they're spending, is it going to generate revenue? Is it going to generate earnings? At the end of the day, that's what investors are worried about. Is this still in growth mode or are they just spending to spend and try to find the next thing? So that is a lot of what's going on out there. They do have a ton of cash on the sidelines. They got about $44.5 billion. Cash flow from operating activities was 30 billion and free cash flow was 10.62 billion dollars. They did increase headcount as of September 30th, increase of 8% year over year. I don't think it was too long ago when they were getting rid of people. And that kind of takes me to Amazon. What's going on in Amazon? And I might actually have to pull this one back up, but Amazon is cutting headcount as well. And they're actually trying to save a lot of cost, right? Where Meta's hiring more people to get these capital expenditure things off the ground. Amazon is trying to save money, right? We're looking at a tale of two cities here when it comes to Amazon and Meta. Meta goes down on earnings. Amazon goes through the roof, right? Through the roof. We're looking at Amazon here. We got them going up 9.5% on Friday. Absolutely massive move for Andrew Jassy and the Bezos team, I'll call them, right? So they are doing things a little bit different. Amazon's recent layoffs are attributed to corporate restructuring rather than AI. Piper Sandler raised their price target to 300, driven by 20% growth in AWS, which has been huge for them, highlighting a strong earnings performance, right? Layoffs to hit Amazon, UPS, Target, and more. Little to do with AI, right? Is it? We'll see. Let's take a look here at Amazon. We've got thousands of workers are falling victim to job cuts at Amazon, Nestle, UPS, other large companies, and an economy defined by uncertainty, AI, and global tensions. They are going to reduce their corporate workforce by 14,000 roles. Announcement raised the question, was it a signal that workers were being replaced by emerging technology that has threatened to make them obsolete? Is it AI, or did they simply just hire everyone they possibly could have during COVID, right? Everyone and their brother, mother, sister, cousin was ordering everything through Amazon during COVID. They couldn't get enough workers, right? I mean, you guys remember it. Anyone could go there, basically write your own, wage. Hey, I need X amount of money. And people were getting jobs at these ridiculously high wages compared to where they were in 2019, right? Was it all $300,000 jobs? No, I'm not saying that, but I'm saying comparatively speaking to where it was in 2019, the jobs in 2020 and 21 were paying much, much more. And now, hey, we basically realized we don't need that many workers. We overhired, we overdid it. So not really financially driven and not even really AI driven, not right now at least. Culture, Jassy said. If you grow as fast as we did for several years, the size of the business, the number of people, number of locations, types of businesses, you end up with a lot more people than you had before and end up with a lot more layers. Well, that's very true. They realize, hey, we have so many people, we can probably do more with less, have less layers, have less oversight, maybe not even less oversight, but less hands in the kitchen, if you will, right? There's too many people. We can't get enough done, and we're kind of getting in our own way. So if we lay off around 14,000, maybe things run a little bit smoother. Maybe we didn't need all these people. Maybe we're paying them too much. So that rewarded the stock, right? So we're looking at a stock that went up through the roof, and the earnings call look great. AWS looks good. There's a lot of different things that are going really, really well for them. AI might be able to replace some of these things or make the people that are there more efficient, which it tends to do. Not always, but as AI gets better, I think that it's going to make a lot of lives easier in what they do. So a lot of different things going in separate directions for Meta and Amazon. Long term, I believe in both of them. I think right now Meta is the better buy. That is why I've been buying Meta. That's why I wrote a call option at 675, and I might lose on this thing, but I do believe in Meta going forward. I think, by 2028, 2030, I think that's going to be the much better play. And that's why I'm there. We did start talking about Caterpillar. I do want to bring up Caterpillar stock because it doesn't really make sense on the surface level, right? On the surface level, I don't really know that it's what everyone thought it was going to be. I've been telling you guys for years that this is one of the first stocks I bought when I had like $1,000 in my account. I had like 4 shares of Caterpillar. This was probably first Trump term, and I think I got in under $100. And then Trump was going to rebuild the world. He's building everything, and everything's going to be new, and infrastructure is going to be there. Well, you would think during a government shutdown, you would think during higher interest rates, you would think a lot of this would slow, right? Well, the housing business has slowed. We don't really know what's going on with the economy. Are people going to have jobs in the government? Are they going to get laid off? Is UPS, Amazon? Who else did we say on that report? All these people are laying off all these different people at multiple companies. Nestle, let me go back. Amazon, UPS, Nestle. Yes, we covered some of those. Is it really a Caterpillar-driven economy, right? Are we building enough? Well, it looks like we actually are. And that's kind of the crazy thing here is Caterpillar had this massive move from 5.25 up to 577 after their earnings. They guided higher. PE's a little bit stretched for them on the trailing 12 months. We could look at the forward. We could do that. I can take a look at Refinitiv and see what their forward price target is here. We're going to share this one. Currently sitting at a buy. We are looking at what was forward? Sorry, forward is actually higher, 31.2 versus a 29.7 on trailing. That's kind of crazy. So they have downside here. I don't know if all these numbers have been baked in. Revenue doesn't look that stellar, right? It doesn't look like it's that big of a gain. But why is this thing going up? Well, a lot of it, yeah, that's scary. Forward PE is at a 31.2. The 5-year average is a 17.9. So it is priced at a 74% premium. The forward peg is super steep. Price to sales is super steep. This does not look like anything I want to get into right now, but let's back up for a second and see just what's going on here. Well, this stock has been going up for the fact that it's tied to AI, right? It's tied to AI, building data centers, all these big corporations that are building all these data centers, and we got to construct them. Well, a lot of Caterpillar equipment's going to be used there. Now, we've talked a lot about how they're going to be powered. They could be powered by nuclear or solar or coal or whatever else they're powered by, but they're going to have a backup. They need to have a backup in order to keep things running. So a lot of that is going to be diesel powered generators. Well, Caterpillar is going to be there also. So not only are they going to have the equipment on site to build these data centers, they're also going to have diesel powered generators as backups for all of the plants and sites that they're actually building that are going to stay there, going to be serviced, going to be taken care of. So they're deploying a lot of different equipment to new sites that is going to actually stay there instead of just being moved on to the next job and maybe have this short-term cycle. There's going to be a boom cycle for Caterpillar as more and more diesel power generators are getting sold to all these new data centers around the world. So whether it's Saudi Arabia, whether it's China, or whoever's building the data centers, there's a good chance that some Cat equipment will be there or stay there long term, depending on what region. Obviously, I would think that China probably has more of their own diesel power generators, and they might not necessarily lean on Cat, but that's kind of besides the point. I think around the world and other markets, there's going to be a lot of Cat equipment that is getting sold there. So not only are we looking at building more commercial sites, yes, residential is probably slowed down. There's a lot of uncertainty if people are going to lose their jobs, if AI is going to take them over, if the government's going to open back up. Maybe we're not, there's going to be a bit of a bubble here when it comes to 2 months of, government workers being off, and the people that deal directly with them, if they can't sell to them, whether it be for defense or whatever, that's going to be a big factor as well. But I do think as rates come down and people get back to work, we're going to start building more for different things and different projects and more homes and things like that are going to have more of an effect on Caterpillar as well as other home builders and all. But I do think that Caterpillar is in a cycle where we're going to see more stock or more equipment have that staying power, and they're going to be selling more and more equipment to these facilities for the foreseeable future as far as data getting built out. Let's take a look at Google. I know we were looking at that one, and we actually have 5 Magnificent 7 stocks that are now valued over $2.5 trillion. Google, decent little week here for them as well. We've got a lot more. Yeah, NVIDIA passes $5 trillion market cap. Trump-Xi meeting concludes. Big tech earnings. We had a lot of good things going here for Google. I still believe that this is a great stock to buy, although I do think that Meta is probably the stock that I would really lean into right now, especially on this downturn. So while we're looking at this, we're sitting at 281. This thing has had quite the 1-year chart. We could probably see this thing down in the 140s. We saw this one down in 140s in April. We've about doubled since there. So that has been an awesome track for Google. Not necessarily the one that I am trying to throw all the money into right now. That one is Meta. That is going to be the stock that I am buying for this week. And the one that I'm going to continue adding if it's under $700. So ticker Meta, we already looked at it. I'm not gonna, bore you guys too much. I just want to take a look at the upside. We got 30% upside on Meta. That is typically unheard of. I think it's got the some of the best pricing power right now as to where it is and where it's going. I'm definitely bullish there. Eli Lilly, I already told you guys, it's probably a little too expensive for where I want to be on that one. AMD, fantastic company, also has already run quite a good bit. I remember when this thing had around 30 or 40% upside, and now it has gotten there, guys. So if you got into this one under 100 in the 80s with me, man, congratulations. This thing has really paid off well. Just huge moves here since April, guys. It's just been insane. Definitely bullish on that one, on this one long term. Not something I'm looking to buy right now. Meta would be the stock of the week that I think is the one that we just should be buying for the investing challenge portfolio. You do whatever you want on your portfolio. That's your call. But yeah, great news there. I'm so glad to see that UPS finally got out of its own way a little bit, and they're starting to put up some numbers. What is Disney doing? The Disney Hulu deal. I really haven't paid attention to this one. I got out of Disney. I know that they're making some moves there, but the Disney Plus prices with Hulu has gone up to like $36 a month, to the point where I think I'm going to cancel it because I don't watch enough Disney to make it worth my while to be buying this thing. Or to be paying for this thing monthly. Alphabet's YouTube says Disney pulls content from YouTube TV. What do we have here when it comes to, oh yes, Fubo TV, right? That was one of the deals that they had. So yes, Disney, Hulu, shares are trading higher on Thursday after Fubo TV finalized its merger with Disney's Hulu plus live TV business, right? So that is a lot of the driver here. Are people going to be paying for this? I think the live TV and the sports, if you can get them from one platform, that's probably going to hurt YouTube TV. So I can make the argument that this is a smart move, but I just don't know as to who's going to cut YouTube TV and now run to the Disney Hulu live TV experience, and just what happens there. So that is definitely something that is noteworthy. We do have Netflix coming out and saying that they're going to go through a stock split. I believe that was a 10-1, maybe a 9-1. Again, not one that I follow real closely. I can take a look at that. I'll say on Google over here, I will take a look at that stock split and see just what that looks like for Netflix. I did hear about that happening. Netflix stock split. And let's take a look. We've got, yes, a 10-1 stock split. Should you buy Netflix here? That's a good question. Should we buy Netflix here? Let's take a look at just what Netflix is doing. 25% of upside on Netflix. Okay. All right. They must be doing something right. And like I said, I would consider getting rid of Disney. I'm not getting rid of Netflix. I think it's what, $16, $17 a month now compared to Disney's and Hulu's like 36, 37. It might even be more with live TV. I might have those numbers wrong. I know the one that we have is like 30 something dollars, and that's probably got to go. But we don't pay for cable anymore, which is super awesome. But it feels like they're just trying to nickel and dime you out of every penny from every different package. So yeah, we're around 25% of upside. Netflix, what do we got on PE? 45. If we take a look at their Refinitiv report, that's going to be showing us if this is actually a good price. We're on a 45 on trailing. We are on a 35.4 on forward. So it's cheaper going forward. Let's take a look here. We are in a buy zone on here. It doesn't always mean anything. We've got 25% of upside there. We've got annual revenue. Nice, predictable, 15% increases over the next 2 years. Let's get down to the numbers that we want to look at. Forward PE is a 7% discount. What's the PEG ratio? PEG ratio is coming in a slightly light 1.6 versus a 1.7 on 5-year. Price to sales is a little bit expensive. Man, I'm not seeing where that stellar. I mean, I guess the PEG ratio is cheaper than the S&P, so that's good, but it's not like this super fantastic, but it's slightly undervalued. And I guess the growth is okay. So that's, yeah, I don't know. It's not something that is like screaming to me that I got to buy this thing. But some of these numbers in this trajectory here on this chart is a nice predictable line up and to the right. So I'll take that. So yeah, I definitely think it could be bought. I don't know. I'm not like rushing to get into Netflix, but I know it's a lot of people's, number one, top 5, right? So I think it definitely makes sense. And it's not something that I'm like actively against. It's just not something that's ever really spoken to me that I want to get into. Now, saying that, I've known people that have made tons and tons of money on Netflix stock, so maybe I'm the one that's wrong here. But yeah, I mean, I think it's a good stock. I think long term, it's a winner. Hopefully, they keep making great content, and it continues to be a good value, right? I think that's why a lot of people are in Netflix, is because it does feel like a good value. You could probably get rid of cable and simply just watch Netflix and have enough to watch, unless you are just on TV all day, every day. I think you could find something to watch on there that seems like a good value for what you get. So yeah, that's my little 2 cent take on Netflix. I'm still buying Meta. That is where I'm putting my money for the investing challenge for this week. I showed you why. I think that hopefully my call option works. If not, I might take a haircut on it this week if it doesn't start panning out. I think it's a expiry on the 21st of November at 675. It's under it right now, so it's got to come up or I got to get out of it. One of the two, so I don't lose way too much money on this option play. But that's what I got going on this week, guys. It's been busy. We talked about Fed. We talked about earnings and possible deals with NVIDIA and seemingly everyone that's out there. Palantir earnings come out tomorrow. I think we covered that. We had a lot of different things to go over. But let me just check my notes. Did we hit them all? We talked Eli Lilly, Forgla Prime. We talked UPS, Google, Meta. We talked CAT. We talked Amazon. Apple, I didn't really touch on that one. Came out, earnings looked solid, but then it kind of traded up, then came back down. It didn't really have any staying power. So the company looks great, but the stock really is kind of like, we'll see what happens. We don't really know if they're going to, create the iPhone or come out with that new tech. I've said that before. They got a lot of things going really, really well for them. And they do have a monopoly on the phone business. I mean, they really do. And a lot of the services that they have are great. So they're not in trouble. I would like to see some kind of new invention or innovation come from them, but they're doing really, really well. So I can't say that they're a bad company by any means, right? I just want to see more. So again, for those reasons, I'm focused elsewhere, but I still own a lot of Apple stock. So that is what it is. But that's all the time that I got for today. Thank you guys for stopping by. I will catch you in the next one. Take care.